So, during a week this past summer, the NASDAQ stock market listed 5 recent initial public offerings, or IPOs, including Sonos, the home audio company, and Vaccinex, which makes a promising cancer drug. That same week, an investor looking at NASDAQ's listing center would have seen the names of 16 stocks set to disappear. And I think that's really surprising for most people. The initial public offering was once the ultimate marker of startup success. Founders of a company might get their idea off the ground by asking family members and friends for seed money, then turn to angel funders, venture capitalists, and private equity investors to keep the lights on during the fledgling years. But the goal was typically an IPO, going to market publicly. But that's changed over the last 2 decades. So why is that? Well, for one, most smaller companies pay 7% of the amount of capital being raised in underwriting fees. SEC Commissioner Robert Jackson labels these high fees as a middle market tax, which deters small and mid-sized companies from going public. In essence, going public is expensive. Investment bankers, lawyers, and auditors collectively charge millions of dollars to prepare the lengthy registration statement that must be filed with the SEC before the shares can be sold. And that's just the beginning. It costs millions more to comply with ongoing disclosure requirements. It's no surprise then that today almost 90% of venture capital-backed firms seek to be acquired. In this sense, publicly traded companies aren't really disappearing. They are consolidating. And I think the real victims of this shift are regular investors like you and me. Because as IPOs become less popular, the shift has been towards private equity. But the thing is, the ways in which average investors can participate in the private market are imperfect. Unless you are very wealthy or very well connected, you are probably not going to be buying into the leading venture capital funds. In essence, the equity markets have been split between the haves and the have-nots. Thankfully, innovation is on our side. Enter the ICO. So in this video, let's talk about the ICO's legacy, how things have changed, especially after our recent downturn, and where we go from here. Most importantly, I want to expand upon what I said yesterday, in that ICOs are dead. Welcome to ReadySetCrypto. This is your brain on blockchain. So, before we go on, there's a couple of live events happening today that I really want to talk about. It's no secret that I value education over speculation. And while I'm more of the investing type, the other half of ReadySetCrypto, Doc, has decades of trading experience. While I focus more on the fundamentals, he looks at price and charts. And so, to that end, he's giving a free webinar tonight on trend trading, titled 10 Steps to Nailing the Next Big Trend in Crypto. I think it's an excellent way to counter this market and get ahead of people who would rather run around with their hair on fire. And if you can't make it, no worries, we'll be doing it again on YouTube Live tomorrow. But we wanted to do this one first in a more quiet session where you'll have more access to him and he'll be able to answer your questions. So details are in the description to sign up for it. Continuing to talk about education, I also wanted to mention that we're having a sale on all of our premium courses to celebrate our 1-year birthday. Thanks to you guys for making it a great year, and I'm thrilled to see how we can continue to spread the good word about crypto. I mean, ReadySetCrypto is all about providing high quality content without having to be paid off by projects or to shill coins. And that's always been my promise to you. And you've helped me make that happen. So thank you. Lastly, it should be pretty clear by the end of this video how excited I am about security token offerings. One STO project that I continue to talk about is PrefLogic, because I think they're doing it right. They're having a free private webinar tonight to discuss some really important implications of recent legislation and why STOs are going to dominate in 2019. What's great is that PrefLogic's webinar and our webinar are back to back, so if you're feeling amiss about today's market, you'll have 2 solid hours of free education regarding 2 very important topics that will help you significantly with your investing and trading. And I tell you these things because I care about you. We're all in this together. Whether this space lives or dies depends on what we do in this moment, right now. And I really think that started with the introduction of the ICO. Anyone with an entrepreneurial idea could float a token and invite people to invest. The investment vehicle was not a broker or bank, but a distributed platform that connected buyers and sellers. What they got in return was not a stock or share in the profits, but the rising value of the token itself. It's a highly liquid stake in a protocol. Most importantly, the ICO illustrated the hope that anyone could be involved in both soliciting and investing in enterprise while bypassing the hugely regulated, bureaucratized, and impenetrable apparatus of the traditional financial markets, including rarefied venture capital funding. Certainly, a year ago today, it seemed like we were watching a beautiful future unfold. The democratization of investment and fundraising. The possibilities were without limit. We had never seen anything like it in the history of finance. But of course, it quickly went off the rails in both expectations and in a downgrade of the quality of listings. That is no surprise to anyone who would watch this sector over several years. A market with virtually no barriers to entry for upstarts is going to attract, well, just about anyone. I think a poignant way to demonstrate this is that a research report written by OKX and published in July showed that during the same week the Nasdaq was losing more than it brought on, which I talked about at the very beginning of this video. There were 14 new ICO listings that went to market, and yet 11 of them went below ICO price within 24 hours. So let's be honest with ourselves here. 99% of ICOs were jumping on a trend and just are never going to deliver the dream that they sold. Most of these tokens will fade into the past with investors left to hold the bag. Unfortunately, many coins will likely never reach their all-time high ever again. It's much more likely we'll see a shift in value from these shit coins, as many would call them, into solid projects that actually built their products. If you scroll through the endless pages of CoinMarketCap, do you really think that every single coin will exist in 10 years or even 2? And I don't mean to be frank, but staying fixated on the past instead of forging the path forward hurts you as an investor. But at the same time, let's not fall back into the trap of viewing an IPO as good in and of itself or somehow better than an ICO. IPOs are often poor investments. One reason we see fewer of them today is that many investors were burned by .com companies that promised riches and then collapsed. Sound pretty familiar? It's a lesson worth remembering, even as the action in the economy continues its shift from public to private markets. In late August, Jay Clayton, chairman of the SEC, announced that the SEC was working on adjusting the current rules to make it easier for average investors to take part in private investment. But the existing barriers were put into place for a reason. They make it harder for closely held companies to take advantage of unsophisticated investors, something that we saw over and over again with the advent of the ICO. So we have a paradox where retail investors need protection of regulatory bodies, but companies are no longer willing to deal with the compliance hell that IPOs bring. In essence, both the IPO and ICO are failing to meet the needs of the majority. But at the same time, private equity is not the answer as well. Private equity has always been associated with startup culture, but it too is also becoming stale. Look up venture capital funding reports from this year and it's clear that there's still good activity, but areas like Silicon Valley are starting to plateau. Meanwhile, in crypto, in the months and years heading forward, we're going to see a very large consolidation into quality coins in the crypto space. Much like the .com bubbles, your job as an investor is to look for the winning coins and services that will last. You're looking for the Amazons and the Googles, not the pets.com. And more importantly, financial business models are going to grow and change over time. It is much more likely that we could see an extended bear market that ends in consolidation of value and users behind quality products and services that deliver. What needs to be stressed is that the beauty of the current climate of the crypto markets and development is that the history is still being written and your actions shape that future. There are plenty of creative ways you can make a profit on your holdings in this bear market by taking advantage of the actively growing open financial tools out there. For example, dApps are becoming more and more accessible. Many of these dApps require liquidity to function and will pay you interest on your tokens to provide it. For example, lending protocols like Compound will give you interest for certain ERC tokens. Uniswap, Kyber, and ZRX relayers all will require pools of liquid tokens to fulfill demand in the future. Staking pools for cryptocurrencies and governance tokens will also become important services for those looking to make interest on their holdings. And look, this technology is brand new, and it is important to realize that the methods for investors to make money in the future aren't going to be the same as they are today. And you as an investor need to evolve with it or get left behind holding the bag. The important takeaway from this video is that thinking outside the box can be very lucrative, and it is your job as a responsible investor to explore new revenue streams to diversify your crypto portfolio in this defining moment in crypto history. You can choose to look at this market and feel scared that the fantasies you formed in 2017 won't come true, or you can look to the future. You can see this market as a gut-wrenching and terrifying one because it doesn't meet historical expectations, or you can look at the adoption occurring on a daily basis and realize right now is an amazing opportunity to build something the world has never seen before. So again, I highly recommend you check out both the webinar that Doc is giving tonight on trend trading, as well as the webinar that PrefLogic is giving on STOs. And as always, be sure to stop by our website to sign up for our free newsletter, read our free ebook, and receive our free 2-hour course on cryptocurrencies. And as always, thanks for watching. I really do appreciate it, and I look forward to seeing you in the next one. Cheers.